Hello and welcome everybody back to my channel. In this video we're going to be talking about this trade that you see over here on EUR USD. We shorted it and I made this trade purely based off of liquidity alone. Okay, so in this video what I'm trying to aim to do is teach you guys what liquidity is and how you guys can use liquidity to your advantage to make insane profits like you see over here. Before we jump into the charts, guys, I just want to say stick to the end of the video because I have a very important announcement to give for you guys for Christmas. Okay, so Christmas is around the corner, New Year's around the corner, and I know a lot of you guys want to trade and want to learn how to trade. If you guys really want to take advantage of these videos that I'm putting out here, stick to the end because I have a very special announcement for all of you. Okay, stick to the end and you will see what it is. Anyways, so if we get into the charts, as we see right here, this beautiful short on EUR USD. Okay, what did I do? How did I take this trade? Okay, why did I even take it in the first place? So let's analyze the charts. And also, this is so beautiful because it hasn't even gone to the stop loss side at all. Like maybe a little bit, but then boom, it's been beautiful. It's been like pumping. The moment we entered, it pumped. So, and it's on the 5-minute time frame, by the way, guys. Okay, so let's look at this. We had a overall, in London session, we had an overall bullish trend. Okay, what do I always say? When London session is bullish, New York session will most likely be bearish. In all of my videos, if you've been following along, that's what I've always said. Okay, so if London session is bullish, New York session will most likely be bearish. All right, remember that concept. Now, based off of that, we're not trading only off of that. Okay, based off of that, we're trading with liquidity. All right, not only was London session bullish, so we're gonna aim for the opposite on New York session. Okay, we're also looking for when liquidity got swept. Previous liquidity got swept, so we can take a trade based off of that. Okay, if we look at this, we had a huge bullish push from this level right here. Okay, we had a huge bullish push. Now this indicator that I'm using right here for liquidity is called liquidity sweeps by Lux Algo. Okay, if you guys want that, it's liquidity swings. Okay, so if you go add this, literally just type liquidity swings on your indicators tab in Lux Algo and choose this and use these inputs, box, labels, lines, everything, but use these inputs. Okay, interbar precision 1 minute, filter areas by count 0, and then 0 and count, pivot look back is 14. All right, use these. It doesn't matter what you have as your swing area, keep it as your default is wick extremity, so keep it as wick extremity. Okay, because we want it at our wicks, not at our candles, because if we have it at candles, it's just gonna look a little messy on the charts. So I mean, it's up to you, but I like it this way. So if we click OK, now we have this indicator with these swing highs and swing lows. All right, that's what liquidity is. If we look at it, this liquidity got swept by this huge candle right here, this huge candle wick right here, not the candle, the wick. All right, right after that, we saw a bullish hammer and boom, we went up. Right after this got swept, guys, right after this got swept, I knew that we're gonna go down to take this liquidity right here. Okay, this liquidity was more than this. You can see numbers on this as well. This is 2.83 thousand. This is 6.522 thousand. So naturally, the higher liquidity will get swept first. All right. So if the 6,000 will get swept more than 2,000, because 6,000 is more than 2,000, right? So we swept the 6,000, and I knew right away that we're gonna have to go bearish. But I wasn't too confident. Okay, I just needed one more confluence. So when I saw this one bearish candle, I was just waiting for one bearish candle to form, and boom, we had our bearish candle right there. When we had our bearish candle right there, what I knew is we're gonna go for shorts. So I had my stop loss right above this wick. Okay, right above this wick, in case we come back and sweep this liquidity before going down, which I mean, it didn't happen, but I knew it's not gonna happen. We have to be safe and sorry. Trading has to be calculated, right? Calculated risk. That's what risk management is. Okay, so this stop loss was above this wick, okay, in case we came back up to take that liquidity. Now we didn't though. Okay, we had a little bit of a bullish push and then we pumped to the downside. All right, this was my first take profit level. Okay, I erased that after the trade, but this was my first take profit level right here. All right, this is a key level and it's also my first take profit level, and I usually don't use multiple take profits, but with this one I had to use it because there were a couple of wicks, so I thought it might switch back on me and take this liquidity before coming down here, right? So we had to have first liquidity and second liquidity in this trade. Again, calculated risk. So right after we crossed this, I knew this big candle, when it closed below, I knew right away that it's gonna go down. And we also had a fair value gap right here. Okay, I also raised that, so I'm gonna draw the fair value gap back here. Okay, this was a fair value gap and it was a bearish fair value gap. All right, so it was a bearish fair value gap right there. Price came back, retested into that zone. We had another bearish fair value gap. So we had two bearish fair value gaps here. This was a very strong sell. At this point, I knew for a fact that we're gonna go down because we had two bearish fair value gaps right here. Okay, one from this and one from this candle right here. And right there, we had our take profit level at the previous liquidity. All right, the swing low, not the swing high, the swing low. All right. So my take profit was right at this level because this is my swing low, otherwise known as my buy side liquidity. Sorry. Also, I don't know if that was the right terminology. I don't usually use that terminology, buy side and sell side liquidity. I'm just using it because some of you guys might be ICT traders who are trying to learn new strategies. But this is basically a key level is what I mean. All right, this is a key level that I had my take profit based off of, right? And boom, right there. This was my analysis and this was my setup. Okay, this is a key level, which was my first take profit zone. My second take profit zone was at a swing low, which is where liquidity usually resides, right? Swing highs and swing lows is where liquidity resides. Come to my next video, I'll be explaining what swing highs and swing lows are, and we're gonna go in depth of how to find liquidity without even having to use indicators, because indicators are like calculators, right? When you're doing a math test, you have a calculator, it weakens your brain. If you can do that on paper really quickly just by looking at it, that's how you know you're strong and you know what you're doing, right? So next video, all I'm gonna be doing is explaining how to find and identify liquidity zones on your chart without even having to use an indicator. Of course, an indicator comes in handy, but you have to know how to do it without using an indicator, because if someone asks you, if you're, for example, if you're in a meeting and you're in a conference and you talk to me and you tell me, oh, you trade with liquidity, and I ask you some questions about liquidity and you don't know how to answer it because you use an indicator and you don't know where liquidity is. If you don't have the indicator, you don't know where it is. You don't know where to look for, right? You're gonna look for the wrong zones. So next video, all I'm gonna be talking about is swing highs, swing lows, and liquidity. If you wanna watch that, click on the next video, come back to my channel and check it out. Turn on the bell notification, because when I put on my next video, you have to be notified. So turn on your bell notifications and subscribe to my channel. I'll see you in the next one. But before you guys leave, I have some important announcement for you guys. Okay, so lately I've been getting a lot of requests for me to teach people how to trade. Usually I charge a lot of money for this. I charge around $400 for an 8-week lesson, okay, which will be coming back after New Year. However, because Christmas is right around the corner, on Christmas Day, I will be putting out a free, 100% free course on trading. 100% free. This is a YouTube playlist, that's a private playlist that I made for people who are close friends, relatives, families, and everything. You will get everything you need to know about trading, from the introduction to Forex to how my strategy works. All right, everything. 400% free. All you have to do is subscribe to my channel, turn on the bell notification, and comment down below. Yes, comment yes, I want to learn. Yes, I want to learn. Comment that down in the comment section below, and I will reach out to you personally. Me or my team will reach out to you personally and send you that full course, okay, which is a YouTube playlist. All right, so if you guys want to learn, comment down below, yes, I want to learn, and my team or I will reach out to you personally and we will get that done. So in every single one of my videos after this till Christmas, I'm going to be saying this, I'm going to be mentioning this. So do not forget to subscribe to my channel, turn on the bell notification, and I'll see you in the next one. Thank you guys. Have a great night.